I'm here today with well-known investor and market trader, Doc Holliday. I interviewed Doc back in February this year, and it's fair to say I don't think either of us expected such a tough run for juniors. Nonetheless, good stock picking is as important as always, despite the markets. It's business as usual, of course, for those listed companies. I hope today that Doc can shine a light on the space for us. Hello again, Doc. Good to speak to you.
Hey Al, good to be back.
Coolio. Okay, so you and I speak regularly. We talk about families and kids, motorbikes, mining projects, and of course stocks and shares. What have you been up to?
Well, I suppose I've been sort of getting familiar with the markets again and how sort of dreadful the liquidity is and the general sort of vibe sentiment around the market, certainly from the secondary market participants, the retail, private investor guys, is pretty low. And yeah, I guess sort of sentiment and momentum just in general, particularly liquidity has been quite dry. So, I think we've been through markets like this before, and I suppose with all of the highs in life, there has to be some lows, and we've seen that certainly over the last sort of 12 months. So we had a beautiful run post March, April 2020. I think it was like shooting fish in a barrel for a lot of people.
Yes, it was.
We spoke when we previously spoke in February. It was a case of, I'd seen a lot of top of the market action and decided to have a bit of a hiatus. And I genuinely believed I was coming back at the right time. I suppose the Ukraine Russia situation has unfolded, causing a little bit of indigestion, turbulence, and unwanted sort of distraction. And now we've got the sort of more impending narrative of accelerating energy and fuel prices, Brexit, inflation. So it doesn't appear to be a lot to get excited about, but we are likely to see a political candidate change in the not too distant future, and I'm sure the narrative post change will be, build back stronger and all that sort of guff. So I do anticipate there'll be a change in the wind, but yeah, it's been pretty arduous.
Sure. So given that we've got this backdrop, you are of course still in the markets. What strategies have you employed to try to get through?
Some pretty bad ones, but the main strategy that I've employed was to de-risk and take a lot of cash off the table when I saw that top of the market action about a year ago. And I've tried not to keep on crowing on about that as much as possible, because I appreciate lots of people didn't take cash out of the markets. So the positions that I was running, some have fared much better than others, but I would say generally few of them are making money. I think some of them are in the money historically, and some of those gains have been given back. But that portion of cash is still quite small, so I've not yet found the confidence to want to enter, a lot more money back into the market. So an existing portfolio I had is really where I've maintained. I do believe that there's a great opportunity out there, particularly in certain sectors that I believe will do well. And I'm still pondering on whether to start entering some of that cash in a frugal manner. But I think the trick in this game is to try and avoid the narrative of you have to be fully invested to be making money. I mean, I think it's pertinent at certain times in the market to be much more invested or have a greater exposure than other times. But at the same time, I think one should always have a retained cash position, because we don't always get it right, Al. And I think being able to say, I was reading the signs and I got it wrong. I've had a good run, but things are going against me. But I've got an inventory of capital which is going to allow me to sort of equalize these positions. I think that's imperative. So if we're in a bullish market, yeah, okay, 70-80% of your portfolio wants to be in the market, that's fine. I think in a bearish market, it needs to be far less. And if you want to sort of hedge your bets, just try and be sensible about managing your expectations, because we can't be winners forever. And unfortunately, we're going to have events and times in the cycle which we're seeing now. And I've been following this extensively for probably 15 years, and I've been knocking about the markets longer than that, as most people are aware. So I just find that sometimes if the markets are red hot, get more involved. And if you can feel the heat coming out of it, try and take a step back. And it's one of the hardest lessons to learn in this game. And there'll be people in the market today listening to this this podcast with yourself and I, and they'll be saying, why on earth didn't I read these signs? What, why am I fully invested? And they'll be beating themselves up. But you have to get a bloody nose in this business to understand how it works. The only job in a bear market like this is surviving. If you can survive with half of what you had, or even a third, once that market turns, you can soon start to grow that portfolio and accelerate again. But you have to learn from your lessons. You can't continually sit and be a victim of the market and take on all of that emotional baggage and not take any lessons from it. So it's imperative that people don't get too disenfranchised, and they try and use this time to articulate to themselves where it went wrong, what we need to do next, and how we can improve for the next upcycle, which invariably we will see.
I agree, Doc, completely, and I think many of the old hands in the city would say that you're not truly an investor until you, as you say, have taken a bloody nose, because then, armed with that experience, you then approach the markets with perhaps a more caution and a more sanguine attitude.
Yeah, for sure.
Yeah. Okay, so Doc, you say you're kind of on the sidelines looking for opportunities and trying to sort of assess what's out there and opportunities. What are you looking at the moment that has caught your eye?
Well, look, there's a bunch of different things, because I think the sectors that have taken a right old shoe in, and as a result of that, those sectors are probably not going to yield big returns in the next sort of month or two or few months, but I think a lot of the damage has been done. So, I look at companies like AMTE. I like that business. I think they came in with a pretty punchy valuation at a couple of quid. I bought some stock in the company. I read a research note from the Money Sponge and kind of bought them right at the right time, really, and took a lovely trade on them. And I've started to rebuy that position, because I just believe that the business is at 58p, having seen levels of a couple of quid at IPO. It seems to be the wrong price. However, yeah, I mean, look, you can go back 3 quid in April of last year. So you fast forward 15, 16 months, whatever, and the thing's trading at 57p. I'd say the damage and destruction in that company has been done. What do we know about renewable energy and ESG and all the rest of it? I mean, there's an argument on the negative side, the con side, which suggests everybody's adopted a business within this area. The early move advantage has been lost. The first mover advantage has been lost. The place has become saturated with small cap opportunities of this nature, and there just isn't the market for it. But then when we look at the macro picture, I think something like, I read a report not too long ago, and it said I think 9% of the total investment in renewable energy, ESG, battery metals, and battery storage, only 9% of the investment have been made. And if these suggestions for us to be, sort of free of fossil fuels by 2050, and all these other statements, all vehicles on the road will be electric by 2027, and all this sort of guff, then we've only invested 9% of what needs to be invested for the infrastructure on this planet to shift. So I guess what I'm saying is, I can see that lots of businesses have come with great ideas. I accept that some of them will fail at the first hurdle, but there is going to be a continued investment within this space. So finding companies within it are important. So I can talk to you about AMTE PLC, and we can talk about the specifics. I like that one, AMTE Power. But look, for anybody else out there, I'm rationalizing it because I want other people to say, well, okay, I don't like AMTE Power. It's had a terrible run. He's talked about it before. It did okay last time, but it's not really doing well this time. Well, go out there and find something else and start to sort of sow some of those seeds of knowledge, and because we are going to harvest it at some point in the future, and having some insight, whether you're buying the equity now, whether you're building up a decent sort of breakdown of companies that are within sector, that's totally the call of the investor or the speculator, or whatever you want to refer to them as. But at least start to sow some of those seeds rather than ignore the change in the way that we fertilize the growth of our portfolios in the future.
I couldn't agree more. And as I said at the start, yeah, the share price might be smashed to pieces over that period, but behind the scenes, there's still a business running away there, and the staff are still working and working hard to build the business up. So the actual company itself hasn't changed. It's just the way the market views that company at the moment. And of course, juniors are in this malaise at the moment where we've almost gone past, I believe, capitulation phase now, and I think we are possibly seeing some signs of a brief recovery here and a bit here. So there's a sense we are very much bumping along the bottom.
I agree. I totally agree, and I think it's just about applying a little bit of common sense as well. So if we're seeing everything mentioned, battery storage, battery metals, electric vehicles, this type of narrative, if we can see it coming back down the path, back down the track, and you've got a company like AMT Power that are producing, that have been working extensively with battery cells for a long period of time, and they understand the flaws that exist within them, and that is, the time it takes for the cell to regenerate, the time it takes for the cell, the temperature in which the cell can operate safely and efficiently, the stability of the cell when being transported. In order for us to have, for us to be able to move these power sources from where they might be built to where they may be used, and all the rest of it, all of these things are super important. So, I mean, we can go back to the 60s and talk about electric vehicles where they had sort of 12. Yeah, exactly. With old turbines in them and sort of batteries that we would see on vehicles times by 12 or 20, and the weight was ridiculous, and therefore the efficiency was terrible. But look, it's just about trying to put the picture together and see where you think the value is, and that's all we're here to do. But I don't want to harp on about AMTE Power too much. It's worth a look, but it's nothing more than that, really. I think there's great opportunity in the resource space. I think if that whole we know that even if we were to in order for China to be able to or Asia to be able to produce the power it needs, because there's a huge critical power demand, they're still going to be building coal-fired power stations just to infill the critical energy gap that will exist for the next 20 years. So again, there's still going to be the historical resources, like we've seen, thermal coal prices going up, metallurgical coal. So if we're going to see the growth and expansion of people and nations, we need the steel, we need iron, we need all of these different things in order to grow. Traditional building of brick buildings isn't going to be the same moving forward. But certainly coal, something that you couldn't have given away, has now seen a massive sort of change in direction, and the price has accelerated. And we've seen Ben's Creek, which I felt got horrifically overvalued based on its asset. But we saw Ben's Creek IPO at 10 pence and get to £1. Shares in that company have collapsed subsequently, and that's just down to the fact that it was fully valued at £1. The valuation had got there probably 2 or 3 years too early. That's not to say it can't get there, but it may well need another couple of years to actually be able to substantiate that valuation. But we have seen companies like that do well. I've talked a lot about Contango Holdings over the last couple of years. Again, we've seen that 5 to 10p move. It's back at 5p. Now, one could argue birds of a feather flock together, and trends are cyclical, and we're going to see that 10p again. But they're very much in that thermal space, and they've got a resource there, and they're at the building stage, which often, as we've seen with companies, that the building stage can be a little bit sort of depressing because there isn't perhaps the significance and news flow that investors look for. But once the building's completed, and on the assumption that the commodity demand is there, then the price will start to move. So whether it be, again, Ben's Creek, whether it be Contango or something else of your interest, we know that the demand is going to be there for metallurgical and thermal coal, certainly for the imminent next couple of years. So, we've talked about renewables. Go on, sorry.
Yeah, and also I was going to say, Doc, you've got the Biden infrastructure budget too, which is 1.9 trillion, and that's to regenerate Central America. You've got these rotting steel bridges and infrastructure there that's all got to be replaced. And again, the consumption of steel that will entail will be absolutely huge. And of course, you've got Ben's Creek sort of, very well placed to take advantage of that.
No, for sure. I mean, I think people misunderstand when I talk about companies like Ben's Creek that I've got some axe to grind. I don't. It's just valuations will get to a point
Yeah.
where once they're fully valued, that company has got to really take a massive leap of faith and do something totally different to see that next valuation metric to take it further. If not, it just becomes a natural buoyancy or gravity that comes within the business, and it finds itself, cooling off or soothing a little bit. And there's nothing wrong with that. It's just investors understanding the rationale. So I've tried to spend a lot of time talking about the rationale of investing. But the thing that investors unfortunately want is you to name the businesses and why. And that for me is more challenging because, you can be hung, drawn and quartered on making a specific call. And often in my own investments, I'm looking for the rationale as to why I'm looking at these things. So, yeah.
Of course. So Doc, what else has caught your eye?
I like gold. I like gold and copper. Copper again because of the renewable theme, and just we could see a long way out that there was going to be a shortage of copper, and we were going to see a turnaround in that sector. And again, there's going to be peaks and troughs within that. But I think the copper gold story is a strong one. Gold mainly because there's nothing else out there that matches it for insulating investors. And when the world is fearful, genuinely fearful for war, pandemics, global uncertainty, gold comes into focus again. And we know that as much as many billionaire investors have tried to tell us, and some have looked very clever. I think Saylor or Baylor or whatever his name was the guy who made 22 billion quid when he bought Bitcoin at $40 in his company, and it went to $60. I mean, at $20, he doesn't look so clever now. But again, not taking shots at anybody, but more so, Bitcoin and cryptocurrency has a long way to go to be able to convince the international community, the richest 1% rich list of people on this planet, ain't going to go rush into Bitcoin should there be serious issue in the future. So therefore, I see gold coming back into focus. There's certainly not been the investment into producing commercially lots more gold, and I can see demand outstripping the amount of it that we know. It's not an infinite product either. So it's becoming more and more challenging to find gold. So the cost of it will increase. Arguably, the cost of discovering it and developing it will increase as well. But I just see it being a commodity that does well in the future. So I think JP Morgan's and some of the big install banks that I don't particularly spend a lot of time listening to were parroting it should be at 2,500, 3,000 in the not too distant future. So yeah, I like gold companies, and I've looked at a couple of small caps that have caught my attention. I've mentioned Sentiment. I've mentioned a couple of others recently. I like ECR. I like the portfolio that Craig Brown ended up putting together. I think at 4p, 5p, there was a lot of excitement in the Bayliston area, the Creswick area, that whole area within Australia was on a bit of a gold rush buzz. And as a subsequent, shares in ECR went from 1 to 4.5 as we followed at the time. And due to unfortunate circumstances, change of management, whatever that might be, and we won't dwell on it too much, but I believe the new guy coming in, having had a brief chat to him, is a great presenter of the business, seems extremely motivated. I think the management team they're putting together there will be more than capable to take the business forward. I think ECR back at a penny looks interesting. Of course, there is an argument that markets are difficult. Anybody trying to raise cash is going to find big discounts and horrible warrant packages associated, and we've seen that with some other transactions over the last few weeks. But it's my opinion that currently ECR are okay for money. There's not going to be an immediate need for a cash call. I suppose if the share double or treble overnight, then they could argue differently. But I think where it is right now, Craig was always great at keeping plenty of cash in the purse, and I'm almost certain they've got enough to keep on cracking on. They've got some of the assets there that I believe they may or may not look to divest or sell if the opportunity or offer was right. And I think you've got to give new management a go. So I think at a penny or sub a penny. I've seen them trading, lower than that. It's getting into that zone where it gets very, very interesting. And historically for the chart, it's the TA guys. You'll go out and you'll draw your charts. We'll get the squiggly lines, go back to about 2015, and you'll see we're getting around about those levels when we get down to sort of 3/4 of a penny as well. So there's probably some historical support down there too.
For sure. Yeah. Okay, Doc. So ECR, any other companies in that sector?
Look, I think it's probably pertinent to just kind of touch on a few. I mean, I can look at companies and tell me, I go blue in the face, but I think just giving a few ideas and the rationale is probably going to be as useful as anything to people. One of the great frustrations I'm finding right now is when you've got companies that have got production, revenue. I look at Harvest Minerals. They've clearly had somebody selling some shares in that business, but it's gone from 2-3p to 12, 13, 15. It's done particularly well. Again, went through the building stage a couple of years ago, and it really, really hurt the business. But they've announced, that they've had accelerated sales. They've exceeded their expectations in sales for the first half of 2022, or was it the last half of 2021? And they're expecting a continuation to be reported at the next set of a financial update, which will point to the first half of this year. But the point being is that they've gone through a growth period. They've had a massive increase in sales. The product now has found its way into industry, and that was always KP Fertile. The argument was it never matched traditional fertilizer, yada yada yada. Well, guess what? It's made its way into the space now. It did take them a couple of years to penetrate it. They are selling it now in quite an accelerated manner. And are they going to run out of a resource? Well, they've got, I think they can produce $20 million for over 100 of KP Fertile for over 100 years. It's never going to run out. They stopped trying to forecast it when they realised they'd got a resource big enough to exceed 100 years. So it's a massive, massive resource. They've now hit that market. It's going to start spitting out cash, and it looks good. Flip down to something like Coro Energy. Had a terrible IPO when it first came to market. They recapitalized the business at 0.40 pence. They were selling the gas assets in Italy. They were divesting that portfolio, and they were looking for a buyer for their discovery at the Mako gas field with the De Jong PSC agreement with Conrad Petroleum. They were focusing up their energy in the Philippines and Vietnam. Renewable energy, got some big projects there. A lot of the debt finance they discussed have been sorted out, or they got a large portion of it. We know both Vietnam and Philippines had wanted to do business and were prepared to finance deals that could, help the infrastructure of their country. There was a lot of cash floating about for it. And then straight out of sort of left field, we suddenly find this whole gas to energy issue going tits up, energy prices going through the roof. The Italian portfolio doesn't get divested, and suddenly its assets at Casa Tiberia and Rapagnano are spitting out €700,000 a month. They were going to divest that whole portfolio a year ago for less than that. So now you've got their May update. It was €568,000 of revenue for that month alone from a tiny, tiny asset within the whole portfolio. And we've seen gas prices go through the roof. So so June and July is going to be €700,000-800,000. I'm only predicting and surmising that. So you look at that. The company's covering all of its G&A and making money just from their sort of tiny little non-core asset now. So you've got £2.3 million of cash, or sterling, or $2.8 million at the last set of finances, which I think took us to April. So the company's got a £5 million market cap, 2.3 million of cash. It's generating about 6 million, 7 million euros from its Italian portfolio. The De Jong asset was on its book internally at $40 million before energy prices went up. If there was ever a time to sell a gas discovery, this isn't exploration. This has been drilled, discovered, and it's got a 2C resource at 495 BCF, and it's got a 3C about a trillion cubic feet. So this isn't something that they've got to find. They found it. So now, when the time to sell that asset is immediately. And if you go and look at the latest presentation, it states by the middle of 2022, the company expects to be in a position to demonstrate to investors how they plan to develop that asset, whether that be through divesting it or whether it be from partnering elsewhere. So I look at that company and I say renewables, gas, lots of cash. It's not going to need to raise money immediately. Still trading at a discount to where it raised its money in April, 5 million quid in April 2021. It's still at a discount to that now. So, this is the mad world we live in now.
Fill your boots indeed. Well, Doc, look, I could talk to you all day. It's been great catching up with you again about this. Let's catch up again in a few months and look at how these stocks have progressed, and also hopefully you'll have some more ideas for us. Meanwhile, just remains for me to say, Doc Holliday, thanks very much again for joining us today.
Absolute pleasure, Alan. Just if I can, before I go, to anybody out there who's feeling the pinch right now, looking at companies, systematically breaking them down and trying to put the pieces together, try and get the framework of a jigsaw from the outside in. And if you look at it and it's a box and a big mess and you think you're never going to be able to put it back together again, you can, but you've got to really start to use this time to build and grow the foundations of the knowledge that you've got within sectors and companies. And if you can do that, you can go on and you'll recover from this, as I'm sure will many, many others. And thanks for your time, Al. Have a great one, and we'll speak again soon.
Wise words indeed. Thank you very much, Doc. Speak again soon.